What's happening, crypto fans? Get ready for a whirlwind of updates that are reshaping the digital asset landscape. We've got seismic shifts in global adoption, massive corporate treasury moves, and critical market signals you absolutely cannot miss. The pace is furious, the stakes are high, and this is your essential briefing. Stick around, because you won't want to miss a single second of this action-packed episode. First up, a groundbreaking report reveals a stunning new leader in global cryptocurrency adoption, and it might just surprise you. We're diving deep into the data that shows where the real action is happening and what it means for the future of digital assets worldwide. Get ready for some eye-opening revelations. Then, we're heading to Latin America, where a major fintech player has just hit a massive milestone, accumulating an astonishing amount of Bitcoin. What's driving this aggressive strategy, and what does it signal about corporate treasury management in the digital age? We've got all the details on this game-changing move. And finally, we're dissecting the latest price action and what's causing the jitters in the market right now. From seasonal trends to major economic indicators and massive options expiries, we're breaking down the forces at play that could shape prices in the coming days. You need to know this. Make sure you're subscribed and hit that notification bell so you never miss an update. Global crypto leadership shifts dramatically. The latest Chainalysis 2025 report is out, and it's painting a new picture of the global crypto adoption landscape, with major implications for market trends and regional dominance. This report is crucial for understanding where the cryptocurrency world is headed. Chainalysis's 2025 Global Crypto Adoption Index delivers a comprehensive assessment of 151 countries, utilizing a sophisticated scoring system based on 4 key metrics: on-chain value received by centralized services, retail-sized on-chain value received by centralized services, on-chain value received by DeFi protocols, and a new institutional activity lens capturing transactions over $1 million. This updated methodology, which removed the retail DeFi subindex, reflects the growing influence of institutional players in the market following the approval of Bitcoin ETFs. In a stunning turn of events, India has ascended to the top spot, overtaking the United States as the leading nation for grassroots crypto adoption. This surge is powered by a remarkable 69% year-over-year growth in on-chain activity within the Asia-Pacific region. The report underscores the widespread adoption of both centralized and decentralized crypto services across this dynamic area. While North America and Europe still lead in absolute terms for on-chain value received, with year-over-year increases of 49% and 42% respectively, the growth rates in Asia-Pacific, along with Latin America, 63%, and Sub-Saharan Africa, 52%, highlight a significant diversification of global crypto engagement. Interestingly, countries in Eastern Europe, such as Ukraine, Moldova, and Georgia, are punching above their weight in population-adjusted adoption metrics. Chainalysis attributes this phenomenon to a confluence of factors, including economic instability, a deep-seated distrust in traditional banking institutions, and a populace with high technical literacy, all of which contribute to a strong inclination towards digital assets. Stablecoins continue to be the workhorses of the crypto economy, facilitating trillions of dollars in transactions. USDT remains the dominant force, processing over $1 trillion monthly between June 2024 and June 2025, with USDC also showing significant volume. The report also points to the rapid ascent of newer stablecoins like EURC and PYUSD, indicating a broadening ecosystem and increasing competition within the stablecoin market. Bitcoin, despite the rise of stablecoins, continues to serve as the primary gateway into the crypto space. Global fiat inflows for Bitcoin purchases exceeded $4.6 trillion from July 2024 to June 2025, more than double the volume for other Layer 1 tokens. The United States remains a dominant market for these inflows, but significant volumes are also seen in South Korea and the European Union. The data suggests Bitcoin's institutional dominance is solidifying, with substantial percentages of fiat inflows in the UK and EU attributed to BTC. The report's findings suggest that sustained institutional interest and the development of evolving regulatory frameworks could bolster Bitcoin's long-term price trajectory. However, the significant role of stablecoins also introduces potential regulatory risks that could impact market dynamics. The clear shift in adoption patterns, with India and the Asia-Pacific region leading the charge, signals a vibrant and diversifying global crypto landscape. This seismic shift in global adoption patterns is setting new benchmarks for the industry, with analysts closely watching how these trends will influence regulatory approaches and market infrastructure moving forward. But that's not all. We're also tracking a major fintech company that's making massive moves in its Bitcoin accumulation strategy. Stay tuned. Fintech giant surpasses 600 Bitcoin milestone. In a significant development for corporate treasury management, Brazilian fintech copyright liuz has not only crossed the 600 Bitcoin mark, but has also cemented its position as Latin America's largest Bitcoin holder among public companies. copyright liuz, publicly traded as Cash 3 on the B3 exchange, has dramatically expanded its Bitcoin reserves, recently acquiring an additional 9.01 BTC. This move brings their total holdings to an impressive 600-plus Bitcoins, a testament to their bold strategy. The latest purchase alone was valued at approximately $1.01 million, with an average price of $112,172 per Bitcoin, according to reports citing LiveGains. What makes this accumulation particularly noteworthy is copyright liuz's commitment to funding these acquisitions entirely through operational revenues. Founder and chairman Israel Salman emphasized that the purchases were made with cash, debt-free, underscoring the company's confidence in its core business model and its financial strength. This approach contrasts sharply with many companies that might rely on external funding or debt to acquire volatile assets. Since initiating its Bitcoin accumulation strategy in March 2025 with an initial purchase of 45 BTC, copyright liuz has rapidly scaled its holdings. In less than 6 months, the company has amassed over 600 BTC. Their consistent purchasing has resulted in an average acquisition price of approximately $103,323 per Bitcoin. Given the current Bitcoin price hovering around $110,000, copyright liuz's crypto treasury boasts a substantial unrealized gain. Data from BTC treasuries highlights the effectiveness of copyright liuz's strategy, indicating a 1.43% yield in Bitcoin since Q2 2025, equivalent to roughly $1 million earned over 65 days. This aggressive yet disciplined accumulation places copyright liuz among the most dedicated corporate Bitcoin investors globally. copyright liuz's transparent approach and strategic integration of Bitcoin into its treasury management practices are setting a new benchmark, particularly in South America. It demonstrates how technology-focused firms can leverage digital assets as a core component of their financial strategy, moving beyond viewing crypto solely as a speculative investment. Industry observers view copyright liuz's consistent conversion of operational cash into Bitcoin as a leading indicator of a cultural shift in corporate finance. This strategy signals robust business operations capable of sustaining aggressive digital asset accumulation, a rare feat for companies, especially in the tech startup ecosystem, which often depends heavily on external capital. copyright liuz's bold move is not just about acquiring Bitcoin. It's about pioneering a new model for corporate finance in the digital age, integrating digital assets as a fundamental pillar of treasury and growth strategy. This strategic accumulation is turning heads, but how is the broader Bitcoin market performing amidst these developments? We'll break down the price action next. Bitcoin faces historical September slump amidst Fed watch. Bitcoin is grappling with its traditionally challenging month, as prices have seen a notable decline from mid-August highs, with traders now keenly awaiting the Federal Reserve's upcoming rate decision. Bitcoin's price has experienced a significant pullback, dropping from approximately $124,000 in mid-August to around $109,000 by early September. This downturn aligns with a well-documented historical pattern. September has consistently been one of Bitcoin's weakest months. Data from CoinGlass reveals that Bitcoin has registered negative returns in 8 of the last 12 Septembers since 2013, averaging a decline of -3.77%, making it the poorest performing month on average. This seasonal weakness is not isolated to the crypto market. It mirrors trends observed in traditional equity markets, with the S&P 500 also historically averaging negative returns in September. Bitcoin's attempt at a rally to $112,600 on Wednesday was short-lived, succumbing to selling pressure during Asian trading hours, further highlighting the prevailing bearish sentiment. The historical context of Bitcoin's September performance shows a mixed trend from 2013 to 2016. However, a significant shift occurred in 2017 when regulatory crackdowns on initial coin offerings, ICOs, triggered a streak of 6 consecutive losing Septembers. China's ban on ICOs on September 4, 2017, followed by a similar move from South Korea on September 29, initiated a protracted bearish cycle that persisted until 2022. The streak was finally broken in September 2023, with a roughly 4% gain following a favorable court ruling on a Grayscale ETF application. And this positive momentum continued into September 2024 with a stronger 7.29% gain. The landscape has been significantly altered by the introduction of spot Bitcoin ETFs in January 2024. These funds, which trade billions of dollars daily, have amassed substantial Bitcoin holdings throughout 2025. Coupled with public companies adding Bitcoin to their treasuries, these institutional flows have provided crucial support, especially during historically weak periods like September. Traders' attention is currently fixated on the Federal Reserve's upcoming meeting on September 16-17. Futures markets are pricing in a high probability, 97.6%, of a 25 basis point rate cut, a move that has received public backing from Fed Governor Christopher Waller. Fed Chair Jerome Powell's dovish tone at his late August Jackson Hole speech further fueled expectations of potential policy easing in response to shifting economic risks. Recent economic data has added to market uncertainty. Wednesday's private payroll report revealed only 54,000 new jobs in August, falling short of the 75,000 estimate and contributing to market jitters. The upcoming official jobs report on Friday is anticipated to provide more clarity, with economists expecting 80,000 jobs added, though there's apprehension about potential disappointment. Data indicating that the U.S. now has more unemployed individuals, 7.24 million, than job openings, 7.18 million, supports the case for Fed rate cuts. Despite the prevailing market nervousness and seasonal headwinds, on-chain data from Hiblock suggests that both retail and institutional traders are actively accumulating Bitcoin during price dips. The liquidation heat map indicates tight trading ranges between $109,000 and $111,200, with short-term traders appearing to take profits near highs while longer-term investors accumulate on weakness. This suggests that underlying demand remains robust. Looking ahead, October historically offers a reprieve from September's downturn, with Bitcoin showing gains in 6 consecutive years and ranking as the second strongest month after November, often referred to as Uptober. While seasonal patterns and Fed policy are key factors, the market is also navigating significant derivative events, which we'll explore next. Massive options expiry sparks volatility fears for Bitcoin and Ethereum. The cryptocurrency market is on high alert as a colossal $4.6 billion in Bitcoin and Ethereum options are set to expire, potentially triggering significant short-term price swings for both leading digital assets. This particular options expiry event in September carries extra weight, as historical data indicates that this month often sees weaker performance and reduced liquidity across the digital asset markets. Analysts are closely watching how this event will influence price action in the coming hours and days. Bitcoin options dominate this expiry cycle, with a notional value of $3.38 billion. According to Deribit, there are 30,447 Bitcoin contracts open. The calculated maximum pain point, the price level at which the largest number of options contracts would expire worthless, is set at $112,000. The current put-call ratio stands at 1.41, suggesting a slight bearish bias in the market, with more put options, bets on price decline, than call options, bets on price increase. Ethereum is also facing a substantial expiry, with $1.29 billion in notional value across 299,744 contracts. The maximum pain point for Ethereum options is identified at $4,400. The put-call ratio for ETH is 0.77, indicating a stronger demand for call options. However, Deribit notes a significant concentration of call options above the $4,500 strike price, suggesting potential upside interest despite the overall ratio. Analysts at GreeksLive have observed a sharp increase in Ethereum's implied volatility, IV, with short-term IV surging towards 70%. This heightened volatility expectation comes after Ethereum experienced a correction of over 10% from its recent peak. The analysts attribute this market skepticism partly to weakness in U.S. equities and the WLFI index. Similarly, implied volatility across Bitcoin maturities has rebounded to approximately 40% after a month-long correction that saw Bitcoin's price drop by more than 10% from its all-time high. Despite the recent price declines, there are signs of a defensive stance among traders. GreeksLive points to an acceleration in block trading of put options, which now account for nearly 30% of the day's options volume, indicating a preference for downside protection. Market sentiment remains fluid, with September historically presenting challenges for cryptocurrencies. Factors such as institutional rollovers and quarterly settlements often lead to subdued capital flows during this period. The options market, as a whole, appears to lack strong conviction in September's performance, reflecting a prevailing risk-averse theme amplified by the current downtrend and declining crypto-related equities. A common phenomenon as options approach expiry is the tendency for Bitcoin and Ethereum prices to gravitate towards their maximum pain levels. For Bitcoin, currently trading around $111,391, this implies a modest upward push towards $112,000. Ethereum, trading near $4,326, may see similar pressure towards its $4,400 max pain point. With today marking the end of the third quarter, liquidity patterns and rollover activities could amplify volatility in either direction. The market seems poised for a period of heightened price action, with traders adopting defensive strategies as they brace for potential prolonged weakness or a decisive breakout once the expiry event clears. Historically, the market tends to find more stability after the options expire on Deribit around 8:00 UTC. The critical question remains: will the expiry event pin Bitcoin and Ethereum near their current levels, or will it serve as a catalyst for a significant price recovery? The dynamics of these options contracts could exert a strong gravitational pull on prices in the immediate term, especially with the maximum pain points situated just above current trading levels for both BTC and ETH. If historical patterns hold true, September will continue to test the resolve of bulls, but the market's increasingly defensive posture suggests that any unexpected upside could be met with equally aggressive repositioning. As this massive expiry concludes, traders are keenly watching for the next market catalysts, and we'll be here to cover them all. But first, let's do a quick recap of today's top stories. And that's a wrap on today's massive crypto update. We saw India surge to the top of global crypto adoption, copyright liuz hit an incredible 600-plus Bitcoin milestone, Bitcoin battled seasonal weakness while eyeing Fed decisions, and a colossal options expiry created market jitters. Don't miss out on future updates. Smash that like button if you found this valuable, subscribe to Bitcoin Bulletin for your daily dose of crypto news, and ring that notification bell so you're always the first to know. Plus, drop a comment below with your thoughts on today's news and follow us on all social platforms for more exclusive content. See you next time.